everyone. Welcome back to the Command Your Brand Show. I'm really excited for this one. So this episode, we're going to be going to something really special here. If you guys have not subscribed to this, please like this video and subscribe because I definitely want people to listen to this. And if you guys like this stuff, please let me know because I definitely want to do more interviews like this. But today we have a very special guest speaker here who is here to kind of fix the industry of health insurance, which is going to be very fascinating to talk about. He is a family of four. You could say he's four. He's got a wife and it's a lot of kids if you include his dog. And he's got, a lot of information about how to fix and what's happening with the healthcare system and insurance and things like that. I want to introduce you guys to Chris. So thanks, Chris, for joining the show, man.
Yeah, thanks for having me. I'm looking forward to the conversation.
Yeah. So I guess what we'll first start off with, some people don't really know who you are. Some people they do, but I want to kind of introduce you to everyone. So tell us a little bit about yourself, like why you started your company and why health insurance.
Yeah, absolutely. Well, if you'd have told me 15 years ago, this is what I'd be doing, I would have told you you're crazy because I actually didn't like health insurance. Probably a lot of people, if you're listening to this right now, you probably don't have a favorable opinion of health insurance because it's expensive and it costs a lot of money to have the insurance and it costs a lot of money when you use it. It's super confusing and it's probably confusing for your employees as well. And it's a source of friction in our lives, but we need to have it.
Right.
I grew up in Southwest Houston, went to school in West Texas, played college football. And that's how I kind of found the area that I'm in right now. I live in the DFW, Dallas-Fort Worth area. My background is actually in corporate finance. I spent 15 years working with large companies, helping them finance acquisitions, buildings, just their operations, and had close working relationships with a lot of these companies, a couple of which were large national health insurance brokerages or insurance brokerages. And I was helping them finance their acquisition strategy, going around and buying companies like ours. And the one thing that became very interesting in that time period was that was when the Affordable Care Act or Obamacare or the ACA, AKA, was being passed and phased in. And a lot of people thought that that was going to really hurt these insurance brokerages. And so when you're trying to raise debt and capital for them to continue to grow, a lot of the investors in the banks were really wanting to understand the impact of this new legislation. And what was interesting when I talked to the brokerages, they were telling me this is going to be one of the biggest booms to our business. We're going to grow exponentially because of this. This is awesome. People are going to have to buy it and the cost goes up. And as they explained to me not only how this was going to impact their business, I'm looking at their financial statements and realizing they're printing money from this. How do they make money? That's one thing that's important to understand. But the second thing is I started asking my clients, manufacturers, distribution companies, wholesalers, how do you manage health insurance costs in your business? And the answer was surprising to me. It was, there's not really a way to manage it. It's whatever the insurance companies and the brokers tell us our costs are going to go up to next year. And it was a real head scratcher to me because some of these companies were really sophisticated, big national, multinational companies, and they had ways of hedging. There's sophisticated mechanisms to hedge their input costs, their oil and fuel and material costs. They could tell me what those costs were going to be 2-3 years out.
Right.
But this health insurance line item was going to go up 10, 12, 15% perhaps every year and no way to manage it. And so as I started looking at that problem and seeing that it was going to get worse, I started investigating what's driving these costs higher. And that was the genesis of this idea that we had to create a business to solve that problem. That's how I got into the industry. So that's kind of the long way around the barn to how I got here.
No, it's very cool. It's actually because, I know a lot of CEOs and founders, they kind of struggle with that too of like, oh God, like what insurance can I pick? Or what, like, why is this so much? Like, why do you think it costs so much? Like, why do you think it just the process of it just seems so difficult for people?
Yeah, I think one, it's confusing.
Yeah.
And so when you have a really big problem that's confusing, you typically are going to bring in experts to help you solve that problem. So you may be listening to this and you have an insurance advisor or a broker that you hire to solve that problem for you. But I think the number one thing that people need to be aware of is how money is made in our industry and who and anybody you engage with in our business, whether it's a broker or an insurance company, what's their interest in your company? Then how do they get paid? Because when you align those two things together, it really dictates the experience that you're going to have and the type of advice that you're going to get. And so I spent a lot of time educating on that, how insurance companies make money, how brokerages make money, and their interests are the opposite of that CEO or CFO or HR leader. They want the business grows by everybody paying more, and the way they profit from rising claims is I think it's and I don't think it is a conflict of interest. Mm. And so because of these conflicts of interest and misaligned incentives of everybody that's involved in the process, and it's like a veil has been put over the client's eyes, the company's eyes, they don't see it. And the music just keeps playing and the costs continue to go up, and everybody that's involved in that ecosystem makes more money in the process.
Wow. It's kind of like amazing how just people kind of don't really realize all the complications that happens with it, and just they kind of miss a lot of things with it. And I know a lot of business owners that just in the beginning, especially when they're starting, they're just like, they kind of like, oh, let's try this. And it's like they kind of miss the ball, and then they actually lose way more than what they signed up for.
Yeah. And I think one of the big things that happens in our industry is the brokerage community has conditioned companies to think about health insurance on a renewal basis, meaning we look at this one time of year from a cost perspective, and we just forward project the new cost for the year without thinking about a longer term strategy. And I like to use the analogy of we need to play chess, not checkers. Checkers is getting your renewal. Okay, what plan can I switch to mitigate the cost this year? But checkers is thinking about what are the things that we're going to put in over the next 2, 3, and 4 years. They're going to create an ROI. Mm-hmm. And ultimately reduce the cost of our plan. And it's going to allow us to provide better benefits to our employees as well.
Yeah. Yeah. And one thing I was kind of curious about, because I know you've been in it for several years, like, I would say, how do you think the healthcare industry has evolved in the past decade? And what do you think people should be like looking out for in terms of all these things? Because I know it's like things obviously have changed in the past 10, 20 years. And it's like, things are included, some things aren't, some things are very small, like, what's the word I'm looking for? Like they include a part of it, but not the whole thing. You know what I mean? Like, what should people watch out for when going into that?
Yeah, so I'm going to start with a macro level view of what's gone on in the industry, and this really paints the picture, and we can drill down where you want. Mm-hmm. But when you think about health insurance 20 years ago, before the passage of the Affordable Care Act, there were a dozen or 12 to 15 different health insurance companies nationally that were providing policies. There was a little bit more competition. They had flexibility on how they offered insurance and whatnot. But what's really happened since the passage of the Affordable Care Act, you're seeing this mass wave of consolidation. So no longer do we have a dozen or more insurance carriers. We've got 4 big ones: Blue Cross, United Health, Cigna, and Aetna. Those are the 4 big commercial insurance companies providing benefits to who's listening to this today. And so they've gobbled up all the insurance companies. It's created less competition, and it's put a lot of power in very few hands. It's an oligopoly, if you will. Yeah. But that trend is further continued, not just buying insurance companies, they're vertically integrating. So what that means is you look at United Health or Cigna, I'll pick on those two for just a second. Fantastic business cases of how to adapt to changing regulation and a changing economy. United Health is probably the leader in this. It's a phenomenal business strategy that they've implemented and executed, and their stock price reflects the value they've created for shareholders. But what they've done is not only gone out and bought other insurance companies, they now own the second largest pharmacy benefit manager, and they're now going out and buying physician groups and facilities. So they're no longer just a provider of insurance, they're a provider of healthcare. Mm. And so now you talk about where all the tentacles are tied up, they're now contributing to the rising cost of healthcare. And the reason why we talk a lot about healthcare is because as healthcare claims rise, so do the insurance premiums that are needed to collect from companies to pay for those claims. So I think that's really important. That's a big macro change that's happened in the industry. And it's been going on for more than 10 years, but it's really accelerated in the last decade.
Yeah.
And so just to kind of further paint the picture on a macro level, what's going on, in the Affordable Care Act, there's a provision called the medical loss ratio rebate. It sounds complicated, but really all it did is it forces insurance companies to pay 85 cents of every dollar they take in on our healthcare.
Right.
So think about this, Josh. You own and run a business. If you can only make 15%, it's capped their profit margin at 15%. And you're only going to be able to make 15%. If you make 16%, they've got to give that 1% difference back to the groups. Do you want to make 15% of $1 million or 15% of $1 trillion? So immediately that one little provision, well-intentioned, has now put the interest of the insurance company opposite of the employer. They want you to pay more every single year and your employees. But what they did, and this is where vertical integration comes into it, they now have a way to overpay for claims. Because if I own the pharmacy benefit manager, which is basically sets the contracted price for drugs, you go fill a drug at the pharmacy, the real cost of that drug is $20, but they charge you $30 at the pharmacy. Where does that other $10 go? Back into the insurance company's pocket. Now, the thing that's important to know is that 15% profit cap doesn't apply to anything that they own in a subsidiary. So that extra $10, some cases it's tens of thousands of dollars on one medication, goes back into their pocket. Same thing with the doctor groups that they own and the facilities they own. When you go in and have a surgery, they overbill the insurance, but they're profiting in the process. And then they come back and raise your premiums to pay for those claims that they've profited from. So it's like a big circular reference.
Right.
So from a macro level, that's the biggest change that we've seen in health insurance in decades.
Wow. It's interesting. I guess for people, for people that want to get insurance, right? Like, what do you find? What are some lessons that people should know about? Like, what are things that people should know when picking a plan? Or like, because, like you're talking about like how much people are paying over time, it's like getting more and more expensive. Like, what tips and what things do you think would be good for businesses should have when either picking one or staying with one? Or what do you think about that?
Yeah, so I'm going to tie in the brokerage community here in just a second. So I've got a glass wall behind me. I'm going to throw stones inside of a glass house, if you will. But just as an insider to the industry, this is what I see happening, and I'll answer your question.
Yeah.
So when companies, maybe a CFO or CEO or an HR leader listening to this right now, and they're going to meet with their broker to look at the plan options that they've got. They're relying on that advisor to bring them the plans and help them make a good decision for their company. But it's important to understand how the brokerages get paid. And so historically, it's just since the inception of the insurance industry, brokers get paid a percentage of the premium that the company pays to the insurance company. It's a commission. And so the industry average nationally right now is about 5%. So if you're a broker and you're getting paid 5%, it's almost like a realtor. Do you want the price of the house to be higher or lower? And so there's not as much incentive for brokers to go out and solve the actual problem. Right. So they're paid a commission, and we often trust and rely on those brokers to have our best interests at heart and make sure that we're seeing the entire options that are available in the market. The second component of that is these big insurance companies will pay very large bonuses to brokers to keep them in the system that they're in. So if you're listening to this and you have a fully insured plan, that's the most popular type of plan for small and mid-sized employers. It pays the highest commission, but it also pays the highest bonus. So when you look at the big national brokers, if you just pull a list of the top 25, they're all private equity or publicly traded, owned. They're either public or private equity backed. And so they're looking at how to maximize return for their shareholders, just like the insurance company. And some of these bonuses that the insurance companies will pay to these brokerages they're very large 8-figure bonuses.
Right.
So you're talking tens of millions of dollars. They're not going to cannibalize.
Right.
So the goal for a lot of these brokers is, how do we maximize our return? How do we keep it simple to execute for us as the brokers? They continue perpetuating the talking points of, this is the best option. This is what most small and mid-sized employers do. These are the only options you have. It just kind of is what it is. So to answer your question specifically, what should employers be looking at? One is, you should be seeing options outside of the traditional market today. So when I say traditional market, you're looking at Blue Cross, Anthem, United Health, Cigna, and Aetna. You should be seeing there's a convergence or a kind of this building, if you will, of carriers to compete with those traditional insurance companies. And the biggest wave, what we're seeing today, is self-insuring or partially self-insuring health benefits for smaller employers. So there are companies out there that specialize in that have removed a lot of the risk. And the reason why that's important is when you're buying insurance from a traditional fully insured plan, you're only going to get a handful of options. And it's like buying a car off the lot. When you go to the dealership, what cars are on the lot today, that's what you have to pick from. But when you partially self-fund a plan, so you're now saying, I'm going to take a little bit more control over what's involved in my health insurance. A good advisor will do it all for you. And they pick the right vendors and allows you to custom build a plan to cover what you want. But most importantly, if you do it right, you ensure that you're not overpaying for your employees' healthcare. You're giving them the exact same thing, access to the same providers, the same medications, but you're just making sure you're paying the right price for that stuff.
Right.
Because when you pay the right price, you don't overpay. We don't have to overcharge for the insurance. Right. And over time, it adds up to millions of dollars for small employers back in their pockets, which in turn allows them to reduce the cost of health insurance in their business, provide free health care to their employees, enhance the benefits. I mean, there's a lot of money at stake here.
Right. Do you find, I hope I don't get canceled for this, do you find that a lot of these companies are very transparent with their prices and their margins and all that stuff, do you think?
No, they're absolutely not. Not the traditional insurance companies. They're not transparent at all. Most of the companies won't even share basic level claims detail. So think about this, Josh, you run a business. If somebody was going to go spend $1 million of your dollars, you cut a check to them. What's a basic question you'd ask? Can you show me where you spent it? What did you buy?
Right.
And oftentimes when you ask the insurance companies that, they don't want to share it. And which is why in Texas, in my home state, our state legislature had to pass a law which forces the insurance companies to give us very basic claims information. But it's not detailed. They don't want to share it. They claim that it's privileged and proprietary and we can't share that information. But if I'm a business leader and I'm trying to ensure that we're getting what we're paying for, we're good stewards of our money, I want to know what somebody's paying for, what they're buying. Are they going out and buying a $2 million Bugatti? Or are we buying 4 Pintos? I mean, what are we buying for this?
Right.
And, oftentimes I meet with executives and they can tell me how much they pay for printing booklets. Our printing cost is 5 cents a sheet. We've reduced it 20%. Well, that's great. You spent $120,000 on printing costs last year, but you spent $10 million in health insurance. How are you managing that? And so we're now talking about, and when you think about the average employer, it's usually the second or third most expensive thing that they buy every year. And they're required by law now to buy it. So if you're a service business, meaning you don't manufacture or produce a good, it's usually your second most expensive line item on your P&L behind payroll. And if you manufacture something, so you're building houses or cars or widgets, it's usually third on your P&L as largest expense behind the cost of the materials, labor, and then health insurance. So the reason why we highlight that with our clients is there's a lot of leverage there. If you can save 10, 20, 30% in health insurance, you're now getting people always ask, is the juice worth the squeeze? If I can add $1 million back to your bottom line, what does that do for the value of your company? But more importantly, over time, what does that do for your employees? How does it make you more competitive in this tight labor market? Everybody's fighting for talent. Usually the mid-sized employers, they're fighting against Fortune 500 companies for talent. So if you can solve this one issue, not only can you make your business more profitable, help your employees, you can use it as a recruitment and retention tool.
Yeah. No, it's very interesting that you mentioned that. I really like the fact that you're educating, especially here for business owners, because I think a lot of people get confused on what to actually do and what the right thing is to do. And I find where you pay for more than actually what you get. Like you don't get as much as what you think you get. I think it's sort of, I don't know what the word is. I wouldn't say, maybe it might be the word sleazy. Like it's sort of like you kind of are paying this and they kind of tell you what the ideas or the concept of what you might get, but it's actually not really in writing or not really sort of there in terms of what's actually on an insurance plan.
Yeah. I mean, think about frustration and friction.
Mm-hmm.
It's when expectation doesn't meet reality. So think about your average employee, or if you're listening to this, think about your average employee inside your company. How much money do they make? They pay a lot of money for health insurance. And their expectation is when I need to use the health insurance, whatever I need is going to be covered because I pay a lot of money. For if you're insuring a family, it's as much as your rent payment, twice your car payment. You expect to get something very valuable for it in return. But what we often see is somebody will go to have a baby, or they need to take an expensive medication, or they got to have a surgery. And then they're then required to pay thousands and thousands of dollars out of pocket. So not only am I paying a lot of money out of my paycheck, when I actually need to use this, I'm now forced to pay a ton of money out of my pocket. But you think about that average employee, maybe they make 60 or 70 or 90, $100,000 a year. When you add it up, this is, you're now talking the average family premium, somebody's paying $2,000 a month. That's $24,000 a year. And then for most mid-sized employers, the out of pocket is $5,000 to $6,000. So you're now looking at $29,000 to $30,000. Somebody that makes $100,000 a year, total cost, if they have to have a procedure done, they're going to pay $24,000 for the insurance and another $6,000 out of pocket. That's $30,000. That's 30% of their income.
Yeah.
But somebody that's making $50,000 a year, they probably can't even afford it because that's 60% of their income going to health insurance. That's why people don't like health insurance, because the experience doesn't match the expectation. But I think about this further, because now we're 10 years post ACA. Mm-hmm. What's the impact to the average worker? All the money that they're spending, if they're buying the insurance and using it, is money that doesn't go to retirement. It doesn't go to kids' college educations. It doesn't go to new cars or houses. All the things that the American dream is built on.
Right.
It's money that's being siphoned away. And because of that, I truly believe that health insurance and health care is stealing the American dream from the middle class.
Wow.
That's sort of the impact. It's not only affecting the profitability and sustainability of our businesses, it's taking away the dream from our employees.
Right. Totally true. Yeah, I could see why also I can see why it stops people from actually having a business. Like I had another lady who does like taxes and other stuff, and they make it so confusing where it almost feels impossible to actually do.
Yeah.
You know what I mean?
That's a common sentiment that I hear.
Yeah. So it's kind of like, it's all you sort of have to educate yourself on what actually it is. And I think what you brought was really good, was just like things that you should know. And, the things that you teach is just like important for people to know exactly how to pick the right insurance, because it's not easy. Because like you get kind of caught in all these good discounts or all these good deals or whatever. And it's like, then you kind of lose track of what actually you're getting rather than what it actually is,
Yeah, that's right. Yeah. So kind of to answer your question about how somebody should pick a plan, mm-hmm. I think the first thing employers should be thinking about is, how do your employees use the current plan? So meaning specifically, are people hitting their deductibles? Do we have high utilizers, meaning people that are going out and getting healthcare services? Understanding what healthcare services they're buying, that will help you select the right plan. You might find that your employees are all frequenting one particular hospital facility. When you think about hospitals, in any city, your city, my city, there's one hospital system that dominates the market. Even though there's more than one, there's one that's kind of the 800-pound gorilla. There are options to find ways to work directly with that hospital to get better pricing.
Right.
And you just have to work with an advisor that knows how to find those plans and is willing to show them, because they typically won't pay the big bonuses. And I think just going back to put your hat on and saying, I'm going to look at this as a fiduciary of my company for the benefit of my company, knowing that this person I'm meeting with, the way they get paid, asking for those options. Am I seeing something that's not from a traditional carrier that can give me better benefits? So it's asking that question. What other options are out there? How is it going to help me lower healthcare costs? That's the next question they need to ask. And an important one is, how do you get paid? Asking your broker how they get paid. Not only is it a commission or is it a fee, but do you take bonuses from any of these insurance companies? Because you need to understand, what is their incentive to keep showing you the same plans. And then from there, it should naturally wash out where you'll see other options. And if you're not getting those options, it's important to get a second opinion or a third opinion from advisors. And I would say there are advisors like me around the country that are in this movement. It's a grassroots movement. And so if you don't get the right answers from one broker, it's probably important to talk to two or three to find somebody that philosophically aligns with your plan goals. They will bring you those options.
Yeah, I think that's a good point too. Like you kind of ask around and actually look and see what the actually options are. Because like I know for you, because you know Hotchkiss Insurance, right? Like your whole job is all around insurance. So like I guess like what are some like skills that you've learned that you feel people should know? I think I kind of touched on this a bit. What do you find the most valued thing in just actually the insurance in the insurance industry, like what they should look out for, and like what has helped you? I guess my question is, what has helped you very much so that can help others to do it?
Is having a contrarian viewpoint of the market. Okay, having a contrarian viewpoint of the market, and then asking the question why. You have to answer the question why, and the answer has to be more than it's just the way that it works. That's all you have, and that's not a good answer. If a broker tells you that, I would advise you to get another opinion because there are solutions out there, and really you're seeing it in the election today.
Yeah.
And it was in the last couple of election cycles. There's this fight over healthcare and the future of health insurance in our business, in our country.
Right.
And healthcare. So you've got one camp that's saying socialized medicine, Medicare for all, the government's going to take care of it all. The question I would ask is, what has the government taken over that they've done a good job managing? That's the first thing.
Yeah.
So if you want your if you're happy when you go to the DMV and you're happy with your experience with the tax assessor, great. Expect that with your health insurance if that happens.
Yeah.
But then this other viewpoint has been, we need to create more competition. We need to open it up, create a capitalist system. And the argument you hear is, well, we already have that and it doesn't work. And I just illustrated that it is not a capitalist system, or it's capitalism gone wrong.
Right.
What I would say is the healthcare lobby and the health insurance lobby in Washington is 3 times the size of the next largest industry. We spent just year to date, we've spent $374 billion lobbying in Washington.
Wow.
And that's big pharma, physicians, hospital groups that are fighting this system. And you got to ask the question, if you look at what they've spent over the last decade, it's astronomical. And with that kind of money over 10 years, if somebody wanted to lobby for change, don't you think we'd have it? And they're really lobbying for more of the same. And it's to keep their pocketbooks lined. It's to create returns for shareholders. So yeah, I'll just kind of put a pin right there. But that's kind of the thing that we're facing in our industry. So going back to socialized medicine or a capitalist society, what you're seeing is kind of on this far end where companies have said, we're not going to wait for the government to solve this problem. We're going to take matters into our own hands, and we're going to create plans with carriers. And so I mentioned partially self-insured. That's where you're seeing the biggest wave happening with small and mid-sized employers is they're saying, we're not going to do the same song and dance every year and expecting our costs to go up 10 to 30%. That's asinine. It's like Einstein said, doing the same thing, expecting different results is the definition of insanity, right?
Right.
And so you're seeing this grassroots effort of employers that are banding together and they're solving the problem one by one inside of their individual businesses. And as they meet in executive roundtables or YPO, Young Presidents Organization, or CFO roundtables, they're sharing their experiences, and it's growing, and it's growing at an exponential rate. Mm-hmm. And so if you're not seeing one of those options, make sure you're talking to somebody that can deliver those to you. Right.
No, I think what you mentioned was very important, because I think it puts in perspective of like what's kind of happening around the world, and just what you mentioned about the the elections and things that's going on around the world. It's sort of like, we're sort of in this fight a little bit of like, what's right, what's wrong, like what should we pick, what should we not pick, and it's like, we're faced with a lot of choices and things, and it's like which one's the best options, you know what I mean? So yeah, I think it's very good. Yeah.
Yeah. And I think it's important to, especially in an election cycle, I don't want to be cynical, but I feel as I see ad campaigns and hear people stumping on the trail, it's the rhetoric is to divide us on a lot of issues. You're either good or you're bad. You're for this or against it. But if you're in New Jersey, right?
Yep, you got it.
And I have clients in California, New York, and all over the country. So for different political affiliations. But what's interesting is when you start talking about health insurance and health care, we actually have a ton in common. And we want to make sure our people are taken care of. We want to make sure we pay the right pricing, and we want to create sustainability for our companies and our employees. And we want to help people achieve the American dream. That's is a goal of anybody that listens to this, is that if you're running a business, you want your employees to be happy so they stay. And if they're happy and they're fulfilled and they're taken care of, they're going to stay. The question becomes, who's best suited to solve that problem? Right. And with the complexity that we have and the way the current system is designed, it just makes it almost feel too challenging to be able to solve it. But there are options out there for companies. We don't have to wait, because who knows what's going to happen in the election, right?
Right.
But there are companies that have been doing this for over a decade that have solved the problem. There are books that are written on it. And there's common sense approaches that we take in our everyday business that we can apply into health insurance to solve those problems and benefit immediately from them. And that's my encouragement to everybody. We actually have more in common than we realize. It's just, what are the tools at my disposal today to address it?
Yeah, I think that's totally true. And I think what you mentioned was actually really correct, is just a lot of people have the ability to care enough about their employees, especially CEOs and founders, and they really want to figure out what's best for people. It's just like which one it is, and I find people make the wrong decisions most some of the time because they don't know more. And they just want to let's just get that one because that has all this, Yeah. So it's very, very fascinating. And I think people do care with how their employees are taken care of. And I think they do have the knowledge of what to actually do and think with it, So it's just picking the right one. And it's just really actually figuring out what's the best line for that area.
Yeah. And when you think about founders and entrepreneurs, there's this big talk of how do I get from 0 to 1? That's the biggest hurdle to get over. Yeah. But once you have proof of concept and you've got a business that works, what's the next hardest thing? It's to go from 1 to 10. And for most businesses, getting from 1 to 10 is scale. And what do you need to scale? Most of our businesses need people.
Right.
And there's a huge talent war going on right now where companies will come and they'll just offer $10,000 more to an employee. Well, how do you create an environment where you're giving them a benefit that's perceived to be higher than that $10,000 raise? How do you give something to the employees that nobody else can match? And I truly believe, based on my experience and the work that we've done with our clients, is healthcare is one of those.
Right. Yeah, it's really incredible. I know the work that you've done, especially with helping people, has definitely helped a lot of people figuring out the right things for their the insurance and what they want. Could you name a few of some of your clients that you've helped and just give a good story of how you've helped them in terms of your company and what you do?
Yeah, absolutely. I'll give a case study for a client that's just right down the road from me. I don't think they would mind if I use their name, but just for the sake, I'm just going to call them Company A. Okay.
Yeah.
It's a group that has about 75 employees. So it's not a large employer. This is a middle of the road, mid-sized company, small to mid-sized company. And 5 years ago, they hired us they were getting what I just described to you. The broker brought them a 30% increase from a big insurance company and said, this is all that's out there. Everybody else declined to quote it.
Wow.
And I had a relationship that got me into the door. And I said, here are the questions we really need to be asking. And if you want to take an alternative approach to solving this problem, here's how we do it. And so I'm a huge fan of group health captives. And it sounds complicated, but really all it is mid-sized employers that band together to buy insurance at scale. So this 75 employee company is no longer buying insurance on their own. They're now part of 1 million other employee lives, because there's employers all around the country that band together to do this, and they're buying it at scale, which makes it safe. And then what they're doing is we put the right programs in place to provide those benefits to those employees at the right cost when they need care.
Yeah.
And so that's probably a deeper dive. I won't go into all those mechanisms right now.
Yeah.
But we enhance their benefits day one. Their employees now had options to have surgeries, expensive medications, all sorts of healthcare services for free.
Wow.
Zero cost to their employees, no out of pocket. But what's most interesting when you look, that's a huge benefit to employees. They say, you need to go have a knee replacement. That can be $75,000. You're going to blow your $5,000 deductible, right?
Right.
Those employees, it literally happened in the first 30 days. They had an employee that went and had a knee replacement, and that would have been $75,000. He saw the doctor that he wanted to, but because we had a direct contracted price, that total cost of that care was $20,000.
It's not bad.
We save $55,000 on one claim, but think about what that means at scale and across all of their employees.
Right.
So now that you look back, we just went through their renewal. Over the last 5 years, moving into this model, that 75 employee company has saved over $2.8 million over 5 years.
Wow. That's
compared
crazy.
to staying in their traditional plan with insert the name of the big insurance company.
Yeah.
And what that's allowed them to do is lower the employee premiums. They offer health insurance for free now to their employees because they've saved so much money. And they've been able to capture that $2.5 to $3 million, call it 2.8. That's money that's now on their balance sheet. And they're now able to use that savings to reinvest in their business. So it's a tech company, research and development, programming, and people. Biggest cost for them. They now have money to pay for that they otherwise would have just given away to an insurance company.
Wow. That's
Super
amazing.
impactful.
That is so amazing. I'm just like thinking, I'm like, wow, you must have save them so much money. And especially with that much employees, it's just like incredible.
Yeah.
That's amazing.
Yeah. I'd love to tell you that that's the only one that we've done that with, but there's literally dozens and dozens of examples just like that, including my own company.
Right.
We've got 180 employees now.
Yeah.
And health insurance is a big line item for us.
Yeah.
And we got a 40% increase from one of the big carriers, and we opted to move into this model, and we've saved millions of dollars doing it.
Yeah. I think you touched about this before, which I'm kind of curious about. Like, do you have is there like a checklist that you find, or like something that is like, these are the questions that you always need to ask when you're talking to a broker or to an insurance company? Like there's like 5 or 10 questions you ask. These are the 5 questions.
Yeah, I've got some questions that I ask. Typically when I meet with employers, I really want to understand their company.
Yeah.
And the very first thing in a meeting I'll have with somebody is, tell me about the goals of your company. Where are you at today? And forget the health insurance piece. We'll tie that in. Mm-hmm. But where are you at today, and what are your goals over the next 3 years? What is it that you're trying to accomplish? And most mid-sized businesses want to grow. Okay, well, how much do you want to grow? What's standing in your way of reaching that? What's the effect that growth is going to have on your business?
Right.
And logistically speaking, what do you need? And when you go through that, you're really trying to understand, how do they compete? Where are the bottlenecks? It's a business strategy conversation. And then ultimately, my component of that is, because most of the time companies need people, and they lose out on talent because somebody opted to go work for a Fortune 500 company because they had better pay and benefits.
Yeah.
And so, okay, well, let's drill into that. What's driving your costs? You got to remember, the number one question is why?
Why?
Why are my costs going up?
Right.
And, okay, let's drill into that. The next question you have to ask is, what influence can I have over that cost driver? And then if there's the answers, well, you can't really, because you're in a traditional model. Okay, well, what would I need to do to have the ability to address that cost driver? Because go back to any other component of your business, the price of the material went up. Why? Do I have another supplier I can get it from? So it's thinking about it from a business strategy standpoint versus just, here's the rates on the page, pick your plan.
Right.
We need to figure out how to manage this like a business unit of our companies, because guess what, Josh? It is a business unit of our company. If you're spending money every single year to buy health insurance, there's a division of your company that's health insurance. We just toss the keys to a party that doesn't have our best interests at heart.
Right.
And there's a different way to manage it. If you want to see a different outcome, you're going to have to manage this like a business, because it is.
Right. No, that's really cool. Actually, and it kind of, I think a lot of us, not particularly everyone around me, but like I know a lot of people who are very confused about it. I think just listening to just kind of gives you that like, hope and like the assurance, like, okay, this is what the plan is, what people can do about it. So I think it gives people a good causational point of like, how can I do it? How can I conquer this like fear and like confusion that may happen or arise in your business? So I think that's very important, very, very important.
Yeah. And what I would say, just kind of further add on to that. So I asked the question of why are costs going up? What can I do about it? The average employer, if you think about how people use healthcare in a given year, you just actuarially speaking, just looking into this population, just imagine we're flying in a helicopter over a group and we're looking down into the population of people that are using health insurance. 85 to 90% of those employees are not using much health insurance. They buy it and maybe they go to the doctor for a sick visit. They've got flu or COVID, or they need to take cholesterol or blood pressure medication, but they're not spending a whole lot. They're not using it much.
Right.
But you'll see this other 10%. There's some people that are having moderate range usage, but about 5% of that population is going to be a heavy user of healthcare.
Right.
They've got cancer. They've got an ongoing chronic condition where they're taking expensive medications. They've got something big going on. Mm-hmm. And so the solution to solve this problem isn't a wholesale change to everything that you're doing. It's figuring out how to help those folks that are driving the cost in the business. Nice. It's almost like the Pareto principle, but even more consolidated. 20% of the output drives 80% of the result. In health insurance, it's about 5 to 10% of the outputs driving 90% of the result.
Yeah.
And so solving for that. And so asking the question, why? What do I need to do? What mechanisms do I need to put in place to control that cost? And then when you control that cost, just for a handful of folks, we're able to create outsized returns back to the company and the employees.
Yeah. Well, okay, good. Well, perfect. Thank you for taking the time to answer a lot of these questions that I'm kind of dying to know. And I really appreciate the things that you've given us in terms of the tips and like how to handle our businesses and things like that, and what happens, the goods and the bads, and how to find the right one. I think it's super important. For people that are listening, they kind of want to know more about you. Maybe, hey, they want your insurance, and maybe they want to get more from you besides maybe this talk.
Yeah, absolutely.
How can people find you?
Yeah. So the website's fixhealthinsurance.com. Mm-hmm. And on that site, I have a playbook. I call it the Benefits Insider Playbook. And it's a strategy document that walks into a little bit more detail of some of the concepts that we talked about: misaligned incentives, how to enhance your plan, how to help your employees. I'm giving that away on the site. Nice.
Awesome. I'm sure we'll have everyone who's listened to this should definitely check it out. And definitely, if you guys are not subscribed to us, you definitely should, and like this channel and the show. And if you guys like more stuff like this, you definitely let me know. And I thank you, Chris, for definitely joining the show and giving us tips on how to handle insurance, because I know it's a big button for a lot of people, especially CEOs and founders.
Yep, absolutely. I appreciate you having me on. Thank you.
Yeah, of course. And of course, guys, if you guys want to check out also our free book that we have online too, the how to, deal with podcasts and how to be on podcasts, is definitely a good show. And definitely our book was definitely free if you guys order it. And of course, we thank you guys for joining us, and we'll see you for the next one.